So our first disaster that we're going to address tonight is when the treasurer of the club becomes incapacitated or otherwise unavailable. The treasurer's role is a key position in an investment club, and without access to the treasurer and the records, the club can be stymied. So there are a few things that you can do to make sure that this isn't a problem. We had heard all sorts of tales, as you might imagine, in the past, clubs where their treasurer passed away suddenly or was institutionalized for some reason, and where they couldn't get access to the treasurer's computer to retrieve the records, and that really left the clubs, those clubs, at a loss. One of the things you can do is to have a backup assistant or co-treasurer who can step in temporarily. Often, if you've got a former treasurer, this is someone who already knows the ropes, they might be in a perfect position to provide support if your treasurer isn't available or becomes sick or unwell or passes away suddenly. Often clubs have a transition plan where they appoint or elect an assistant treasurer who serves with the primary treasurer, with the understanding that they will rotate into the treasurer position after learning the ropes. That can be useful as well. It's always good if an officer, such as a president or administrator, has access to the club accounting data in addition to the treasurer. And iClub really makes this easy. You can switch or assign a new treasurer immediately. The data is always accessible and backed up on the server. So your club has to have an administrator, and that administrator will always have access and can appoint new privileges to members, such as the treasurer privilege. If you're not using iClub, then it becomes a little more complicated. You want to make sure that you've got a redundant backup plan. We'll talk about that, that somebody else has access to the data on a fairly regular basis, that you have all of the account numbers for your investment club account at your brokerage firm accessible, and understand who has access to those accounts. So think through what your club would be lacking if your treasurer suddenly wasn't available to answer phone calls or emails and attend meetings. What's the information that treasurer has and that the club would need to have. So this is a pretty serious one. Of course, as makers of investment club accounting software, we tend to see these issues and hear about them and provide as much support as we can, but our support is limited if the club never made backups of its club accounting data. And we'll talk more about backups as well. And certainly a problem that would affect your club is if the computer of the treasurer were to crash and take with it all of your investment club accounting records. And so this is a very serious problem, because you might have years of data, and that can be a real hassle to try to recover that data or to re-enter hundreds, if not thousands, of transactions over the course of many years. So you can counter this by having a robust, redundant data backup plan in place. This will really make sure that you can recover quickly. And by this we mean you have multiple secure copies of your investment club data that are generated on a regular basis and stored in multiple secure locations. So when we talk about data backups, if you make a data backup, put it on a flash drive, and store it right next to your computer, that's only as safe as your computer is. If you have a house fire or a flood, that would destroy the backup as well as the original data, and so the backup isn't serving any purpose. So we often suggest having multiple copies, so maybe once a year, making a copy of your club accounting data, putting it on a flash drive and storing it in a member's safety deposit box, or if a member has a fireproof safe in their home, something like that. And then updating on a more frequent basis, whether it's monthly or quarterly or every 6 months, and having that data be more accessible. Some people put that flash drive and take it to work and put it in a desk drawer at work, a locked desk drawer, for instance, and that keeps that data off premises. For Club Accounting 3, this is really important. You need to have a strategy because the Windows version of our Club Accounting software operates on your computer. There is a backup function that allows you to copy your data files onto another drive or another location or a flash drive or a remote hard drive, something like that. One of the things, and this is what Russell has often counsels people to do, is to email that backup file to yourself or to another trusted member. And that's something you could do on a monthly basis. Make that backup every time you finalize the club's records for the month prior to the meeting. And then if you email that backup to yourself, if you're using a cloud-based email service like Gmail or Yahoo, you can move that message into a separate folder. And so it's really stored out in the cloud. And yet it's very accessible. All you need to do is log into your email, find that message, download the attached file, and restore from there. So think about that very carefully. And there are a lot of clever ways. If you're using a service like Dropbox, where you're storing files on a cloud-based system. That can be an option as well. It gets it off of your computer and allows you to have access to that data. For My iClub, our servers are backed up regularly. We have a redundant backup system in place. However, our servers are really only, our backup routine protects your data along with everyone else's. We don't have the capacity to restore a single club's data. So if for some reason you've got you let a new treasurer take over the books and they entered 30 transactions and they were all incorrect, and then they deleted 40 transactions, and so but they don't know which they deleted in order to, we have these situations where people go down the rabbit hole where they're trying to fix a problem and they end up making it worse. That's not something that we're able to provide support for, but we give you the capacity to do it on your own with the backup manager, which is in the utility section. So there, the treasurer can back up the data at any point, and we suggest that you do make regular, even a monthly backup is fine. You don't need to do it much more frequently than that. And what that does, or anytime before you make a complicated transaction, we'll talk about that as well, how you can handle that. But again, that's the advantage of My iClub, is you don't have to worry about your computer crashes. If your computer crashes and you are a My iClub subscriber, just go to another computer, go to the website, and your data is fine. So that is one advantage of the online-based program. And then another, as I mentioned, sometimes the Club Accounting data gets corrupted. It could be your data on the computer if you're using Club Accounting 3. It might be due to a virus or a hardware problem that might lock out that data or make it inaccessible. As I said, sometimes the treasurer might delete the wrong entries and then can't really figure out what they did wrong, and in trying to restore things, add additional transactions, and then there are duplicates. And so it really, those kinds of problems become very difficult to unwind. But with the backup manager in My iClub, we recommend that if you're entering a complicated transaction for the first time, maybe it's a merger transaction with cash, and it seems like it's multiple steps and it's kind of complicated, or if you're entering a member withdrawal and you're not very comfortable with handling member withdrawals, we suggest that you go to the backup manager first, back up the data as of that point prior to that transaction or a series of transactions. And then if you mess it up, you just wind the clock back, go back to the backup manager, restore that single backup, and that will take you back to where you were before you started entering that transaction. Again, if you're using Club Accounting 3, you can do the same thing, just make a backup before you enter that particular transaction. So the backup is meant to be long-term protection, but can also protect you from yourself. And we know it happens where you know, that you have a brain cloud and you can't really remember what you were doing, and you power through, and before you know it, you're in a situation where you're not really sure what you've entered, what you haven't, why things don't add up right, and you just want to go back to the beginning. So it makes it easy to do it when you've got that in place. But again, being comfortable with the backup manager in Club Accounting 3 as well as my iClub, those are really important. They're not just useful for moving data to a new computer, they're also great protection from you know, miskeying things and misentering transactions on your own. If your club membership falls to too few people, that's often a threat. We hear of a lot of clubs that disband, not because they're not successful, but because they have too few members. And those too few members have to do more work, and it just becomes too much. It defeats the purpose of being in an investment club. Now, and so the club decides to disband. Now, I've heard of clubs of 4 or 5 people that have been around for a long time, and they can be viable. So if your club membership really declines, if the people who are still members are committed, you can make the club work. Especially if you're managing your own portfolio, maybe it can be a better experience. You can share some of the workload, but once your club becomes so small, it really becomes hard to find new members. It becomes much harder because now there are so few of you. It can be intimidating for someone else to come into that experience and want to be part of it. So I recommend that you focus on recruiting members on an ongoing basis, that you commit a certain amount of the club's resources towards recruitment, towards attracting new members, towards spreading the word about your investment club, and just make that part of your regular operating procedures. Don't put it off until you've got a sudden spate of 2 or 3 members withdrawing and you think, oh my gosh, now we really need to find some new members. By that point, it's going to be a much harder task. So, and you know, what's the worst thing that can happen with a successful recruitment effort is you have too many candidates for your investment club. Well, that's great. If you have a waiting list and you add people, say, well, we're full right now, but we can add you to the waiting list, that just makes your club that much more attractive. And then when you do have another member withdraw and space opens up, you can invite new people to join your club. So we suggest, so that's my recommendation, is focus on recruiting members on an ongoing basis. Don't wait until you're in a crisis to move forward with your recruitment.
Doug?
Yes, go ahead, Russell.
I've known a fair number of clubs who have a large number of family members, mine included. It's mainly family and old friends. And we're also, some other clubs have done this, thinking of making the club intergenerational. So get your kids to join. If you have grandkids, start them with joining too. So that's also another way to recruit new members within the family.
Yeah, that's a great point. Although a lot of family clubs, by virtue of being a family club, they if the family's not very big, their recruiting pool tends to be a little smaller. But often family clubs are a great way to introduce the next generation to successful methods of investing. So yeah, that's definitely should be on the table. Next up, this is something that we grapple with on an ongoing basis, is clubs have crises that occur because they've got a member who wants to withdraw and they don't have enough cash to pay out the withdrawal, or they don't want to raise the cash, or they're unable to raise the cash for the withdrawal. And we try to educate clubs about the possible scenarios for withdrawing members, because they're not all equal. There are sometimes some withdrawals that are best processed by selling or transferring stocks. And we built a tool on my iClub that's our withdrawal scenario calculator, and that determines the best ways for you to process a withdrawal, depending on whether you have a full withdrawal or a partial withdrawal. We will lay out the different scenarios for selling or transferring stock, whether you sell appreciated stock or depreciated stock, and explain the rationale and the IRS rules that govern these types of withdrawals. And so it doesn't have to be a crisis. There are some of these methods, depending on whether it's a full or a partial withdrawal, some of them will benefit the remaining members and the withdrawing member and help the club and portfolio. Others will have unnecessary ramifications and should be avoided. And the rules for member withdrawals when you're considering the tax ramifications and the IRS rules can be really complicated. So this member scenario calculator really helps you. There's also a link to an article that I put together for Better Investing magazine a few years ago that has a decision chart that you can follow through that will help you to make the right decision for your member withdrawals. Oftentimes there is a better and a best method, and whether you choose the better or the best method is really up to you. And every club will have some different things to consider and different rationales for it. But I hate it when I see clubs choosing the wrong decision, making the wrong decision, and all of a sudden clubs now the club members have to pay more capital gains taxes sooner than they otherwise would have to, and that the withdrawing members not getting the benefit that they could have gotten if you had used a different method. So please do your research and use that tool. We added the withdrawal scenario calculator to our new wizards section just to add that link because it is a very useful tool that can help you with that member withdrawal issue. Oftentimes clubs, especially during the summer or the holidays, they may have trouble getting enough members to make a quorum. And a quorum is defined in your club's operating documents. It's the minimum number of members by individual members or by membership ownership in the club. It's required for your club to conduct business, which means approving transactions, approving members, approving withdrawal, approving other business that comes before the club. If you don't have a quorum, then your club meeting can't transact business. Now you can still have an informal, unofficial meeting. You can still review the financials. You can still look at stocks, but you can't approve the minutes. You can't do anything that requires a vote of the members without that quorum in place. So to get around this, many clubs allow for members to submit or file or provide a proxy that gives their vote to another member of the club. And you can do this on a meeting by meeting basis, or you can provide a blanket proxy that says, if I'm unable to attend any meeting, my proxy, I hereby give my proxy to vote on matters that may come before the club to member, John Smith. And that would be on file. And as long as John's in a meeting, then your shares would be voted. And you would do that to someone that you would trust to vote in your interest at the club meeting. Another method in some clubs, including the Mutual Investment Club of Detroit, which was one of the founding clubs of the modern investment club movement back in the 1940s. They had a policy where each member signed a proxy statement that provided their proxy, if they were unable to attend a meeting, would be distributed to all of the members who were in attendance at that meeting in proportion to their ownership in the club. And so in other words, if a member who has 20% of the club is unable to attend, and I have 10% of that club, then I get 10% of the 20% voting rights for that particular club. So the idea is that the people who show up get to make the determine the quorum and can vote to transact at business. And so not being able to conduct business often may just be an inconvenience, but there could be situations where you have member withdrawals. People are counting on getting their withdrawals processed in a timely fashion, and you're unable to do it, and so it's kind of unfair to those members. So think about your proxy policies and address them, and that way you're able to take action when you need to in order to conduct appropriate business for your investment club. So let's talk about portfolios and your stock holdings, and often disaster scenarios kick in when one of the club stocks drops in price. It could be 10, 20, 30%, could be significant. It's important to remember that stocks fall in price for both rational and irrational reasons. And so simply because a stock has fallen does not mean it's a bad company, does not mean that it's not a possible long-term investment for your portfolio. You need to understand the likely cause for the decline in the stock's price. You need to do some research, and online forums and outlets provide plenty of opportunity for you to investigate that price decline. If the reasons appear short-term in nature, it's quite reasonable that you might decide to hold or even purchase more, and that's fine. If you're really uncertain, if the reasons appear to have a long-term impact, then replacing that stock might be reasonable as well. I have a rule of thumb that says that any problem that can't be resolved within 3 or 4 quarters is not a short-term problem, and that maybe the company says, well, we'll have this by the 4th quarter of next year. We'll have this resolved. I always add a little extra, 50% more time to that projection, figuring the company's a little more optimistic. And then by the time you're out a year and a half, 2 into the future, problems are not short term. And the bigger problem is that Wall Street's got a memory, and if the company's been underperforming for a year and a half, then a lot of investors are going to stay away from that company for another year and a half, 2 years, even if the company is performing well on a fundamental basis. So this is part of my case for selling stocks more frequently and sooner than otherwise might seem to be logical. It's because of how the market reacts to underperforming companies. It tends to penalize companies over the long term for short to mid-term problems. So either way, don't act out of panic. Consider replacing companies rather than simply selling them, and that can help you mitigate the problems that come from a short-term issue that affects a company. And keep in mind that if we have a bear market, every stock is going to decline. That's not necessarily a negative thing. And that's, as I said, a lot of price movement is irrational. A lot of price movement is dictated by traders who aren't looking out for the long-term interests of the company. And so as long-term investors, we focus on a horizon that's much longer than what's happening today or this week or next next month or next quarter or even the rest of the year. And we're focusing on the potential of the company over the long term. So you want to keep that in mind as you're looking at companies. And then finally, what's going to happen in your investment club when the market drops 20%? And by definition, that's a bear market. When the market retreats 20% from its highs, that means that we would be entering a bear market phase. Now, the present bull market is very old at 10 plus years, but doesn't mean that the bull is unstoppable, as Barron's said last week. With their cover story was asked, is the bull market unstoppable? There's no predicting the direction of the market. But the thing to remember is that, yes, we're going to have a bear market at some point. And the problem with bear markets for investment clubs is that clubs get discouraged. They get depressed coming to meet each month, be reminded of how much they've lost, quote unquote, in the market, how their club unit value has declined so much. And that can be frustrating if you don't have the right mindset. But if you remember, on the other hand, that bear markets always end, and that if you invest regularly in the club, you're going to reach giant rewards when the bear market ends and the next bull market kicks in. And so focusing on that long-term perspective can really help you. Now, most bear markets don't last more than 10 months. That's the average length of a bear market. So they feel much longer while you're in them. That's a lot of time to be spending wondering when the bear market's going to end, but over time they always do end. And it can be very useful to be thinking about opportunities that you're provided during those bear markets to buy high quality companies at bargain levels. And so that is something to keep in mind. Personally, in my investment clubs, whenever we've had the market going down or the unit value of the club declined a little bit, I would take advantage of those and I would kick in a little extra that month. Our bylaws allowed us to make a minimum contribution and then we could add to it. So, and if we were in a bear market, I just increased my normal contribution a little bit more than average and maintain those higher contributions until the market corrected or reached back to prior levels. And once it was a little more elevated, I might kick back my monthly contributions. So from that perspective, I'm buying more units because they're on sale. And then the value of those units increased when the market recovered. So that's my personal approach to bear markets and investment clubs. Certainly the history of the investment club movement, the earliest clubs in the 1940s and 50s experienced not only war, but also periods of economic recession and all sorts of bear markets in the mid 20th century, and really learned this lesson that if we had a 3-year bear market and we were continuing to make our monthly contributions every month, and we were buying stocks and managing our portfolio and taking advantage of the price opportunities, that when those bear markets ended, those were the top performing investment clubs after that point. And it's all just too sad that so many investment clubs shut down during bear markets. They get depressed, and members are hearing their personal brokers telling them, oh, it's time to move to the safety, move to the sidelines, move to cash. And that might be fine for a portion of your personal assets, but your club portfolio should be part of that long-term focused growth stock, capital appreciation, total return vehicle. So maximize it while you have the opportunity. Finally, what happens when the IRS sends you a letter? And often that will be a letter that assesses a penalty, says that you didn't file your return, there's interest if you don't pay right away. Don't panic when that happens. If the IRS says that your return was not received, reply with proof of mailing or your e-filing confirmation number, and just let them know. Maybe they do make mistakes, they do get numbers crossed, wires crossed, etc. So first thing to do is try to provide proof. If you actually didn't submit your return in a timely fashion, you didn't request an extension, the IRS may assess a penalty for you. But often, as a pass-through entity, you can request for reply, explain the situation, and ask for a one-time forgiveness. And the IRS will generally do that, but they'll only do it once. And after that, you'll want to you're going to be on the hook. So be timely. Make sure you've got proof of mailing, and then the IRS will generally give you the benefit of the doubt. But you've got to have copies of those tax returns and copies of your proof of mailing and accessible. So keep your files in a good order, because the IRS can come back even when you think everything has been done correctly. They can come back with questions or with penalties. If you do get a letter from the IRS and you are using one of the iClubcentral tools, you can contact us and we can provide some suggestions for replying and language that you can use. Russell.
Doug? Oh,
Yes.
there was a club that forgot to file for several years, and they contacted us. And during my research and helping them, I found if clubs meet a certain requirements, they can essentially get their penalties forgiven no matter how many times they file late. Now, you have to meet certain conditions, and I'm sorry, I don't remember the conditions off the top of my head. It's part of the IRS regulations. So it's usually if you're small enough and that all the members got the information to file their personal tax returns. Then if the partnership files late, it's not a big deal, and they'll forgive the penalties and everything. But so don't push it. Don't try it.
Yeah.
But even if you do it more than once, there might be a way to get around it if you meet certain requirements. And again, just contact us and I'll relook those up and see how we can help you.
Yeah, generally the clubs that we've worked with who've had these kinds of problems, the outcomes have been favorable for the clubs. Don't automatically panic and send the IRS a check for $6,000 the first time you send a letter. Let's work through it first. You can call them, you can write them a letter, you can provide an explanation, do the research, and then get that outcome. Steve in the comments says that they were contacted 3 times by the IRS. The first time they asked for forgiveness. The IRS said they were late, and so they asked for forgiveness, and the IRS said okay. The IRS came back to them 2 more times, and those times they had the proof of mailing, and so they were able to demonstrate that to the IRS, and so the IRS said, oh, okay. So it happens. And I think my sense is that as more and more well, first of all, e-filing is great because there's evidence of filing your return and we have the documentation to back it up as an authorized e-filing provider, and so that can simplify things. But also the IRS is doing more computer matching of what your broker tells the IRS and what you report to the IRS, and they're looking at those tax ID numbers, and they're looking at the numbers and making sure they're matching, and they're doing a bunch of that type of automated efforts at trying to find people who are underreporting their tax burden. So it's more just increasingly important for your club to be complying with all the regulations and making the required forms and reporting back to your members appropriately. All right, Russell, any interesting questions coming in the comment section there?
Um, well, lots of interesting. I don't know if there's anything that pertain. One asking about what happens if you don't have a backup treasurer and something happens to the treasurer. Um, in the past, usually it's me. I've worked with whoever's left, and even including if they send broker statements, making their final transactions for them and doing all the withdrawals, making the actual entries, and then sending them off and say, here, look at your records now. There, you can see this, and here's what you need to do. So even in that sort of drastic situation, we usually end up helping and help the club, can, wind up their operations and
Yeah,
in those dire circumstances.
yeah, that's a great point, especially if you're using My iClub. We, we can see, you can provide us permission to look at your club records so we can see them. So if you have one treasurer and one treasurer only, and that treasurer suddenly is not available and the club wants to wind down, Russell has done that in the past. So that's just something to keep in mind as well. Don't panic, just get in touch with us and we'll try to help you as best we can.
Please don't abuse me and have lots of them do it.
Yes. Some questions about tax law changes and selling stocks, first in, first out. When you sell stocks in your club, Richard asks, with the new tax law change, must selling stocks always be first in, first out? Whenever you sell stocks, and this is for investment clubs as well as your individual investors, there are a couple of different methods that you can use. Well, there's really two different methods. You can use the first in, first out, which means that you are selling the shares that came in that you bought first are the ones you sell first. So the first ones into the account are the first ones out of the account. And the second method is a specific lot basis, where you identify the specific shares that you purchased on a specific date as part of the shares that you're selling. And then kind of related to that, there's LIFO, last in, first out, which is really just another way of calculating the specific lot basis. The tax law still allows you to change your method. The default method is FIFO. So if you don't say FIFO, if you don't indicate a method, then the broker assumes that it's first in, first out, and will report your basis to the IRS accordingly. As Russell pointed out, that some brokers allow you to set your preference on a kind of global basis throughout your account. So whenever you sell, it's either on first in, first out, or you identify specific lots, or you use they may offer a last in, first out, for instance, or there are other methods. You can say sell the stocks with the greatest capital gains. So I know that if you're using a platform like Folio, you can say sell the stocks with the greatest capital gains or the least amount of capital gains, and it will calculate and sell those shares and provide that documentation to you. Generally, I like having the flexibility to identify specific lots when you're selling partial holdings, and it does complicate things a little more in the reporting process, and you've got to make sure that you understand how your broker accepts that first in, first out designation, because they are reporting capital gains. Now, 10 years ago, 15 years ago, you could, it was kind of on the honor system. You could say that you were selling shares, you just placed the order with the broker, and there was a requirement that you told the broker, if you were using specific lot basis, which shares you were selling. But in practice, I don't think a lot of people actually did it. They still reported on their tax returns the gains according to whatever method. But now, since the brokers are reporting cost basis to the IRS for sold securities, you need to make sure you understand how your particular brokerage firm can support that tax lot identification.
Yeah, I think you did it, but it bears repeating. If you don't set a preference, if your broker allows you to set a preference on their online trading platform, and if you don't, when you call in or however you put in the order, if you don't specify lots, the broker is required to use first in, first out if you don't identify them.
Well, great. I think that about wraps it up tonight. So thank you, Russell. Thank you, Sean. Thank you to all of you who've attended tonight. We'll look forward to seeing you next month at our next Investment Club webinar. Congratulations to all of you club members and taxpayers for meeting your annual obligations to the Internal Revenue Service. We are already hard at work on the 2019 tax printer for investment clubs. We're looking to add another state or possibly two to our online tax preparation program. So that is very exciting news. Obviously, that's where we're shifting resources where the states want taxpayers to be filing online. So we are already working on next year's tax preparation software. So with that, we'll bid you a good night, and we will see you at our next Investment Club webinar.